Right now, millions of people are working 40 hours a week trying to build wealth. But a small group of investors, they're getting paid while they sleep every single quarter without working an extra hour. The difference? One ETF 4 letters SCHD. This video answers 3 questions. What is SCHD exactly? How do you build a real dividend portfolio with just $5,000? And exactly how do you buy it today? By the end, I'll show you how $5,000 in SCHD grows into a portfolio paying you $383 every single month, without adding another dollar after day 1, and a bonus version where 2 small changes turn that same $5,000 into $891 per month. Same money, 2 very different lives. Let's get into it. So, what is SCHD? Schwab US Dividend Equity ETF. Forget the name. Here's what SCHD actually is. A filter. That's it. There are thousands of stocks in the US market. Some pay dividends, many don't. Of the ones that do, some are strong, many are weak. SCHD filters out the noise. It runs every dividend-paying US company through 4 strict tests. 10 consecutive years of paying dividends, positive cash flow, strong relative dividend yield, and a composite score ranking debt, return on equity, and 5-year dividend growth rate. Only the strongest pass. Right now, 104 companies pass that test. That's what you own when you buy SCHD, not a bet on one company. A stake in 104 of the most financially strong dividend-paying businesses in America. One company cutting its dividend doesn't break you. The other 103 carry it. That's not diversification. That's armor. SCHD has raised its dividend every single year since it launched in 2011. Expense ratio? 0.06%. $3 a year on every 5,000 invested. That's it. The portfolio is built around 3 ETFs, each one with a specific job. First, SCHD, income that grows. 10-year annualized return, 12.37%. Current yield, 3.4%. Dividend growth rate, 11.04% per year. Your income doubles approximately every 7 years. Automatically, SCHD is the foundation. Second, VYM, the Vanguard High Dividend Yield ETF. Over 550 companies, broader than SCHD, more sectors, more stability. Where SCHD is concentrated quality, VYM adds width. Expense ratio, 0.06%. Current yield, 2.8%. Third, JEPI, the JP Morgan Equity Premium Income ETF. JEPI sells covered call options to generate additional income. The result? Monthly income, not quarterly, every single month. Yield? Approximately 7.5% annually. Expense ratio? 0.35%. Free funds, free jobs, SCHD, growing income, VYM, breadth and stability. JEPI, monthly cash flow. Here's how the $5,000 splits. 60% into SCHD, $3,000. 25% into VYM, $1,250. 15% into JEPI, $750. Blended annual return, approximately 11.3%. That 11.3% is the number that does the heavy lifting over 30 years. 3 steps to buy it. Step 1. Open a brokerage account. Fidelity, Schwab, or Vanguard. Free to open. 10 minutes online. Step 2. Fund the account. Transfer $5,000. Before you buy anything, turn on automatic dividend reinvestment. That one toggle is worth tens of thousands of dollars over time. Step 3. Search the ticker .SCHD VYM JEPI. Enter the dollar amount. Confirm. Done. Now. What do you do after you've bought it? Nothing. You don't check the portfolio every morning. You don't react to the news. You let the portfolio do exactly what it was built to do, and you get out of the way. Hold through the drops. Your portfolio will go down. Not might. Will. But every major dividend ETF has recovered from every crash. The investors who lost money permanently weren't the ones who held. They were the ones who sold and never came back. Review once a year. Rebalance if needed. Then close the app. Go live your life. Here's what the future looks like. $5,000 invested once. Nothing added after day 1. Dividends automatically reinvested. Year 10. Portfolio approximately $14,700. Dividend income $44 per month. Year 20. Portfolio approximately $43,400. Dividend income $131 per month, year 30. Portfolio approximately $128,000. Dividend income $383 per month, passive, automatic for the rest of your life. Not because you got lucky, because you got consistent, but what if you wanted more? 2 changes, same $5,000. Change 1. Remove JEPI. Put everything into SCHD and VYM. 70% SCHD, 30% VYM. SCHDs, 11% annual dividend growth crushes JEPIs. Static yield over 30 years. That's a compounding decision, not a yield decision. Change 2. At $50 per month, less than $2 a day. Year 30 result, portfolio approximately $268,000. Dividend income $891 per month. Starter portfolio $383 per month. Accelerated portfolio $891 per month. Same starting point. 2 different choices, 2 completely different financial lives. The question isn't whether $50 per month is too much. The question is which life you want. Both start today with $5,000. That's the entire plan. SCHD, VYM, JEPI. 3 ETFs, 3 jobs, $5,000 one time, $50 per month if you want to go further. Subscribe to Dividend Dawn. That's who we are here. See you in the next one.